And you actually had a relatively strong, private domestic number and growth of upwards of 3%. You combine that with the fact that, payrolls rebounded to a pretty significant degree relative to consensus expectations and looked pretty solid for the first quarter. That at least tells the Fed that things were relatively strong and economic momentum was relatively healthy coming into the year. So if it's going to take a little bit longer for, tariffs to start to take a bite out of growth and also for it to lead to a buildup in inflation, then that probably is a reason for them to stay on hold. And you add to that, the uncertainty factor probably gets you to maybe the first cut happening in the fourth quarter of this year. But of course, anything could change between now and then.
Yeah, Kev, listen, I'm going to go off on a slight tangent here, but I think it's worth talking about. Jensen Huang, the godfather of AI, trying to talk about the China market, how important it is, not just for NVIDIA, but for actually U.S. jobs, that they have continued access and they're able to sell into China. Obviously, there are the export and technology restrictions. When I heard that, and he's saying, look, it could in 2-3 years become a $50 billion market, China AI, that is. I'm thinking this guy's got some cojones, right? The U.S. is trying to do all it can, or as much as it can, to keep China from getting its hands on the highest end chips that NVIDIA makes. And Jensen's talking about, hey, look, don't cut us out. We need this market, and it's going to end up being good for American jobs. Are you expecting any sort of pushback or backlash from comments like that?
I think that, it's hard to always forecast any kind of pushback and who it comes from. But I think the one thing that's important you talk about, I'm glad you bring up the jobs picture as it relates to exports, because what's often lost, I think there's two factors I think that are often lost, two aspects that are lost when talking about the U.S. goods deficit that we have, and on the opposite side, the surplus that the rest of the world has in a goods sense. What I think gets lost in a lot of this is the focus on how much of this trade war around the world now potentially hurts our exporters. Exports are almost 12% of U.S. GDP. That's not an insignificant statistic. And you add on to the fact that we have a services surplus, a considerable services surplus with most of the world. So when you talk about, things that are, whether it's export controls or whether it's relatively aggressive, import tariffs that are being paid here, that potentially has a, deleterious effect on employers here in the United States. So I'm glad you bring it up, because there are certain ripple effects that are associated with this. And especially when you're talking about, the U.S. China relationship in particular, that one has clearly been singled out relative to the rest of the world. And at times you hear administration officials talk about things like national security or intellectual property theft or, bias towards state-owned enterprises. A lot of the language that was used in the 2018 to 2019 trade war is being used again. But, China is also in a very different spot today than it was in that initial trade war. But I think that, the focus on how much it starts to impact jobs here is really important, not just on the goods side, but also on the services side.